All right, so it's no secret the stock market is down right now. So the question really arises where to put your money in a time like this. A lot of people want to put their money in a place where they can get a guaranteed return. With the federal fund rate going up, the interest yield that you can earn on your money is going up as well. So today we're going to be talking about some of those places where you can park your money and still get a guaranteed return. So let's get started. All right, today we're going to be talking about 3 different places where you can put your money and still get a good amount of interest yield back. The first on this list is a high yield savings account. Now, you may have heard about this or you may have not, but there are a lot of high yield savings accounts out there that are offering a higher interest rate than a regular normal savings account that you may have at your bank currently. This is a really good option for an emergency fund that you're keeping for a rainy day and to put in this account and still earn interest while you're keeping that money safe for whenever you need it. Now, typically a savings account or a high yield savings account is limited to 6 withdrawals a month, but that was waived during the pandemic, and the Federal Reserve Board has not reinstated that law. So you can still withdraw more than 6 times a month currently from a savings account. Now, how much interest you can earn from these accounts really depends on which account you pick. There are a lot of high yield savings accounts out there. It's really good to shop around, compare the interest rates and the minimum amount required in the account to earn interest. Currently, the interest rates for the high yield savings account are going up. For example, I currently have a high yield savings account with Citibank and my interest is all the way up to 3.1%. It was as low as 0.5% in 2021, and when I got it 2 years ago, it was at 2.5%. So interest rate with the savings account can go up and down depending on how the federal fund rate is doing and how the market is doing. So let's talk about some of the pros and cons of a high yield savings account. Some of the pros are you have easy access to your money. You can open at any bank. Usually the online savings account offer higher yield than the ones that have a physical bank. They're FDIC insured. Now let's talk about some of the cons. You'll get a lower API with a brick and mortar bank that have a physical location. As I said earlier, an online high yield savings account will give you a higher API. Now withdrawing from these accounts will require a transfer and is limited. Now that limitation of 6 withdrawals a month is currently waived, so that's not in effect right now. But despite that, in order to get your money out, you'll have to transfer your money to a different account to remove the money, as you don't have a debit card or a checking capability with these accounts. Now with these accounts, the APY can drop at any time. Like I said in my example, with my Citibank account, I started at 2.5% and it dropped all the way down to 0.5% in 2021. Now it's back all the way up to 3.1%. So the API can change all the time. There's no set fixed interest rate. Now I'm going to be making a separate video on the best high yield savings account, which will be coming shortly. So stay tuned for that. Now next, we're going to be talking about a money market account. Now money market account is very similar to a savings account, but with few exceptions. It has easy access to your money as opposed to a savings account, as you can have a debit card and you'll have checking capabilities with a money market account. Now it has the same limitation as 6 withdrawals or transfers a month, which is currently still waived, like I said earlier. Now let's talk about some of the pros and cons of a money market account. Some of the pros of the money market account is that it gives you easy access to your money, even more than the savings account, as you have debit card and check writing capabilities. The API for these accounts is still usually higher than your traditional bank, so that's also a pro for these accounts. And they're also FDIC insured. Now, some of the cons with the money market account is a lot of them will require you to have a minimum balance in order to have an APY incur on your money. Now, this has not been true recently, as a lot of the banks are offering money market accounts that have a $0 minimum or even a $1 minimum. Now, another con with these accounts, just like the high yield savings account, the APY can change and drop at any time. So there's no fixed interest rate. And usually with these accounts, the APY is lower than the high yield savings account. Because you're getting the extra benefit of able to withdraw your money easier, the APY will be a little less than the high yield savings account. Now, lastly, we're going to be talking about a certificate of deposit, a CD. Now, this is a special type of account which will give you a much higher API, even more than the high yield savings account and the money market account. But the catch is your money is going to be locked in for a certain amount of time period. Now, terms for the CD accounts can range from a few months to a year to a few years, depends on how much longer you want your money locked in. And the longer the term, the higher the APY usually on those accounts. So if you don't need your money for a long time, it's better to get a longer term to earn a higher interest over time. Now, for some reason, if you got a CD and you need to withdraw your money before the term is over, you will incur a penalty for removing that money. Now, one benefit of having this term on the CD is that your interest rate is locked. So unlike the money market account or the high yield savings account, when you buy the CD, say for 12 months at 3% interest, that 3% interest will be locked for 12 months. No matter what, if the interest rate outside is going down in any way, you will still get the 3% for those 12 months. The only downside to this would be if you were locked into an interest rate and the interest rate went up, then you're still locked into that 3% interest rate that you got with your 12-month CD. There is a way to counteract this, and I'm going to be making a video on the best CD accounts and how to counteract that changes in APY. And usually you do that with a CD ladder, but I'm going to be talking more about that in the next video. So stay tuned for that too, okay? So let's talk about the pros and cons of a CD account. Now, some of the pros for the CD account is you're going to be getting a higher APY, even more than the high yield savings account. And like I said before, it depends on the term. The longer the term, usually the higher the APY for these kind of accounts. And the interest rate for these accounts is usually locked, like I was talking about before. So once you get a CD for a term, your interest rate for that term is going to be locked no matter what is happening in the market. Even if the high yield savings account interest rate is dropping, you're still going to get the same rate for that term, which is really good. Also, you can open these accounts at any bank and they're also FDIC insured. Now let's talk about some of the cons. You have limited access to your funds because they're locked in for a certain term. You cannot remove the money until the term is over. And like I said before, if you do remove it before the term is over, you will incur a penalty. And another con is if the APY is increasing outside and you bought a CD, say at 2.5%, and it's locked for 2 years, and for some reason the market is changing and the high yield savings account or the CD rates are going up to 3.5%, 4%, you're still locked in at 2.5%. So there's a benefit of having a locked interest rate if the rates outside are dropping, but there's also a detrimental if the rates are increasing. So you have to keep that in mind. Now, another great place to park your money is in I-bonds. The rates for I-bonds are pretty high right now. And I did make a separate video on I-bonds, which you can check out. So I will not be covering the I-bonds in this video, but I will link a previous video with the I-bond that you can check out. So those are some of the places to park your money for guaranteed return. Now, for me personally, I use a high yield savings account for using my emergency fund. I put all my emergency fund that I save in a high yield savings account, which incurs interest. And I keep the money for a rainy day. If something happens, I need the money instantaneously, I can transfer the money and still obtain the money. CD is a really good option if you already have an emergency fund and you don't want to invest all your money in the stock market, given the state of the stock market right now. You can put some of the money in the CDs. And like I said before, I'm going to make another video on the best CDs that are out there right now and how to make sure you make a CD ladder, which is the best way to use the CDs. So these are some good places to park your money during a recession and still get guaranteed interest rate back. And as always, before opening any account, always do your own research. Look at all the APYs for all the accounts and minimum required to earn interest on each of those accounts. Compare multiple accounts before opening one. It's always good to have some competition before you open an account. So there you have it, guys. That's the video for today. Thank you so much for watching, and I will see you next time.